you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and here with me today is Stephen Moore, manager of the Artemis US Extended Alpha Fund. Hello Stephen.
Hi.
It's a bit of a mouthful, Artemis US Extended Alpha.
Isn't it?
What exactly does Extended Alpha mean?
Extended Alpha takes a long-only fund and it adds on a short book, which usually equates to about 30% of the exposure of the fund, and then it takes the cash from that and invests it back into the long book of the fund. And so you end up with what is called a Beta 1 fund, which means that it matches overall market exposure, but with the added benefit of generating alpha on the new short positions that you've added, as well as increasing the size of the long positions, and so generating additional alpha associated with that.
So sort of for the layman, that means that if stocks go down, you can still profit?
Yes, if the stocks that we're short of go down, we can absolutely profit. The idea is that there's more capacity for alpha generation. And in addition to that, if you introduce short positions and you can offset that against long positions, that reduces the overall risk of the portfolio, the overall volatility of the portfolio, and that's something that we've very much benefited from historically.
Well, so smoothing volatility and benefiting from falling stocks are two things that are probably good to hear for people who are nervous about the US stock market, because there's a lot of, I mean, it's not even rumours anymore, everybody's been saying the US stock market's due a correction for about the last year. I mean, where do you stand on that?
Well, it had a correction, and it was definitely something that we were concerned about, and markets fell peak to trough. US market fell peak to trough 10%. That's a pretty healthy correction. The opportunities for investing in the US are still reasonable, but certainly not what they were a couple of years ago when valuations were a lot lower. I think that the prospects for the US market are pretty good relative to other asset classes around the world, but the truth of the matter is we've had an everything rally, and asset prices have increased in valuation substantially, and so I think that there's the prospects for a general correction are actually higher than they were, associated with higher valuations. But the U.S. equity market on a relative basis is still, I think, a very attractive place to invest your money.
So just be prepared perhaps for a bit of a bumpy ride.
Yeah, I think no question lower returns generally and high volatility are probably reasonable expectations.
Stephen, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.